Hello everyone, Stephen Primo here, and welcome to this brief educational video where today I'd like to talk to you about two edges to help you survive any market. And this applies to virtually any time frame as well. Let's take a look at these charts right here. The first one is PLRX. Now most traders would say, well Steve, the market is going sideways. In fact, it's a trendless market. So I've always been taught to stay away from markets like this. This is where you lose money. But the first edge I'm going to teach you today actually would have told you that the overall trend was up. So therefore, you should have a buyer's perspective. And the second edge that I'll be teaching you would have told you that the short-term trend is up. So these are two fantastic edges that form a synergy for success. And as you can see, you could have potentially captured 15 points in the next week. As we look at this chart as well, in CHTR charter, we see once again the market is basically doing nothing. It's in a range, right? And these are the ones you want to stay away from. Usually you buy at the top of the range, you sell at the bottom, and so forth, right? But the first edge would have told you that the overall trend was down. Therefore, you should have had a seller's perspective. And the second edge told you that the short-term trend is down. Once again, with these two aspects together in sync, you could have potentially taken advantage of a 130-point move to the downside. So welcome, my name is Stephen Primo. I'm the president and founder of Specialist Trading. If you're new to my educational videos, we're all about educating traders, and I'm happy to say we have students around the world in over 115 countries and in virtually every state in the United States. I've been trading for 45 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. A specialist is someone who makes markets in roughly about 50 or 60 stocks. I made markets through the crash of 1987 and the bull market that followed. So I've traded and seen just about everything. I've traded straight up markets, straight down markets, sideways markets. It really makes no difference. So my whole goal is to teach you things that I've discovered in my 45 years of trading that have high levels of consistency so that ultimately you can make your own trading decisions. And you'll see that attention to detail in today's educational video. Now, before we begin, we're required to share this disclaimer with you, so please take a moment to view it. I'm going to share with you a lot of performance results using these two edges, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, since we are an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get some more education on a daily basis, please feel free to follow us on Twitter. There's our handle right there. I would suggest copying that down because every day I post anywhere from 5 to 6 different examples of signals that our methods have generated. Also some bits of financial wisdom to help you along the way. So lots of great free education on a daily basis. Please feel free to follow us on Twitter. Okay, so let's begin this educational video. And I'd like to start out with something that my mentors taught me because believe it or not, when I first started trading on the floor, I was doing probably the same things that most of you are doing, right? Looking at all the earnings, waiting for the economic news to be announced, following all these gurus on TV or in the blogs or going to chat rooms and trading rooms. Although 45 years ago, we didn't have chat rooms and trading rooms. There was no internet, but we did have a lot of different news sources to subscribe to and a lot of news services. But I was basically being taught to listen to what someone or something else is about to tell me. And here's what my mentors taught me, because believe it or not, I couldn't make a dime using all of those things. So here's what I learned trading on the floor of the exchange. What my mentors taught me was simply this. Being out of sync with the market is at the root of all your losses. You see, I always thought that, well, it's because the earnings came out and I was, had the wrong estimation, or it's because that announcement came out and the jobless claims, or it's because that guy touted this particular stock. But really, when you break it down, the common denominator was I was out of sync. I mean, think about it. When you buy and it goes lower, you're out of sync with the market. You're going against what the market wants to do. And when you sell and it goes higher, you're out of sync. So what we want to do is simply be in sync. It doesn't take a lot more knowledge than that. We just have to simplify things. Now, the trouble is, everyone has their own idea of how to be in sync with the market, right? They have different indicators to tell you about, or you're supposed to look at 2 different time frames. The higher time frame in sync with the lower time frame will tell you what the market wants to do. Or we look at patterns, higher highs, higher lows to tell us what the market wants to do. Okay? These are all the things I was taught 45 years ago. And once again, they didn't work for me then, so I don't think they're about to miraculously turn around and start working now. Let me share with you these two edges You can start using them as early as today. All right, edge number one. If price is above the 50-period simple moving average, the overall trend is up. Therefore, you should have a buyer's perspective. It's as simple as that. Now, if price is below the 50-period simple moving average, the overall trend is down, and you should have a seller's perspective. It's that simple. In fact, you can apply this right now on your charts, regardless of time frame, regardless of market. Let's take a look at this generic chart right here. Most traders would say, well, there's absolutely no trend. In fact, we're going down, back up, and then back down again, right? But if we apply the 50-period moving average, we ask ourselves, where is price in relation to that? Well, price is above, obviously. So the market is telling us, not some guy on a blog or not some guy on TV, the market, the very thing you're trading is telling you the overall trend is up. Therefore, you only want to be a buyer. Now, this can work the opposite side as well. We look at this generic chart here, once again, no trend, right? Kind of going sideways. But if we apply the 50-period moving average, where is price in relation to that? Price is below. So your overall trend is down. Therefore, you only want to look at this from a seller's perspective. You will have a higher level of consistency if you are in sync with the overall trend. Now, how do we get in sync with the short-term trend? Because I know a lot of traders say, well, Steve, okay, so the overall trend is, let's say, a daily bar, so I want to know what the hourly trend is doing. Remember, keep things simple. There's no reason to overcomplicate things by looking at two separate time frames. Let's go on to edge number two. When a bar closes in the top 25% of its range, the market is saying, I want to go higher. When a bar closes in the bottom 25% of its range, the market is saying, I want to go lower. Now, if you're a little bit confused about what this means, let's look at this generic bar right here. All right, what you want to do is take this bar. It could be a monthly bar, could be a tick chart. Doesn't matter. But divide it by 4 separate but equal parts. And if you close in that top 25%, what is the market telling you? Not some guy in a webinar, not some convoluted indicator, but what is the market telling you? It's saying, I want to go higher on the short term. So as we look at this generic chart again, the overall trend is up because we're above the 50-period moving average. Therefore, we want to find bars that close in the top quarter of their range. Here's one right there, and you can see we went up for the next 5 or 6 bars. And then as the market sold off, it's not time to start getting short again because we have another bar that closes in the top 25%. And look what happened. So you see, a lot of traders would say, well, Steve, I could have made money to the downside. Yes, but don't you think the odds would have been in your favor if you were in sync with the overall as well as the short-term trend? Now, this can work to the downside as well. As we look at this generic bar chart here, this could be a 5-minute chart, could be a monthly chart. Makes no difference. But you want to divide by 4 separate but equal parts. And if you close in the bottom quarter, what is the market telling you? It's telling you it wants to go lower on the short term. Once again, as we look at this generic chart here, the overall trend is down, right? So we have a seller's perspective. Now, in order to find and get the short-term trend in sync, we want to find bars that close in the bottom 25%, as this one does right here. And look what happened right after that. You see, we're trying to put the odds in your favor by being in sync with the market. And it doesn't take having some convoluted indicator that you have no idea what it's based off of, or it doesn't take subscribing to some chat room or some trading room. It doesn't mean you have to wait with bated breath for the earnings to come out. You can do this right now on any chart, any time frame. And this is how you can become in sync with the market. I have been using these 2 edges in my personal trading for the past 4 decades, and I feel these are the cornerstones as to what has sustained me now for that period of time. So let's look at some examples to show you how powerful these 2 edges are. And remember, everything you're going to be seeing today comes directly from our platform. This is the PTS Primo Charting platform I developed with ProPrietary Strategies, the educational platform that teaches traders how to trade. And we specifically made it simple so that looking above and below the 50-period moving average and finding bars that close in the top or bottom 25% of their range are just 1 click away. Okay, let's look at Moderna right here, mRNA. All right, once again, looks like we're kind of going sideways, right? We've drifted up a little higher, but now we're going sideways. But if we click on our platform, buy sell line, this is the 50-period moving average. We call it the buy-sell line because it literally tells us whether we should have a buyer's perspective or a seller's perspective. Click it on, and we see that right here, price starts to close consecutively above the 50-period moving average. So what is the market telling us? It's telling us that the overall trend is up. Now, the next thing we do is click on the top bottom 25% tab right here, and that will automatically show us the bars that are in the top 25% of their range. And here we have 1, 2, 3. Now here's a little trick I want to teach you. What you want to look for are at least 2 or more consecutive up arrows, bars that close in the top 25%. Because this is showing you this confluence, this overall and short-term trend in sync with each other. And oftentimes when you see 2 to 3 right next to each other, it's followed by a nice big move. And as you can see later on, there were 2 more right here. Now, all of this was done without looking at any earnings, not looking to see what the market was doing overall, what the indicators were telling you, what the support and resistance was, what some guy was saying on TV. Nothing. For the first time, you're learning how to listen to the most important thing, which is the market right in front of you. Let's look at an older chart of Netflix right here. This is coming into the beginning of the year in 2022. All right, obviously it's been going lower, right? So there's not a lot of, you have to figure out to know it's been in some type of a downtrend, right? But let's say you go to that chat room and the guy says, hey, we are so oversold. This is where all the institutions are buying, and they're never wrong, right? They have all the big money. And we have some major Fibonacci support, and you've got to buy it here because this is really where it's going to bounce, all right? Obviously, we've identified that it has been going lower, and we confirmed that, but here's where you got to step in and buy at these lower levels, all right? Sound familiar, right? This is the way most traders make their decisions off someone or something else telling them what they think is going to happen. I did the same thing 45 years ago. Now, my mentors told me to only listen to what the market's telling me. How do we do that? Well, we first apply our overall trend tool, which is the buy-sell line, the 50-period moving average, and we ask ourselves, where is price in relation to that? Once we apply it, we see that price is below. So what's that telling us? The market is telling us the overall trend is down. Do we want to be a buyer if the overall trend is down? Absolutely not. We're never going to buck the overall trend. But now let's see if it's in sync with the short-term trend. So now we're looking at a daily chart here. Do we have to go to an hourly time frame or smaller? Absolutely not. All you have to do is click on the top bottom 25% and find the bars that close in the bottom 25% because they're telling you what the market wants to do on the short term. Isn't that amazing? Look at all the bars that close towards the bottom. You see how the market's telling you it wants to go lower? Now here we have 2 right next to each other. And look how the market fell out of bed and then some. In fact, it fell a total of 425 points. And all the way down, it continued to generate these bars that close in the bottom 25%. So do you see how simple this is? Let's look at this next example. We're looking at a weekly chart of Costco. Now, just because we change time frames doesn't mean anything changes with this, these 2 edges. We're above the 50-period moving average. The overall trend is up, I should say. And then we apply the top 25% bars. We see we have 2 right next to each other, followed by 3 right next to each other. And look what happened after that. The stock went up 210 points in the months to follow. All right, here's a weekly chart of W-day, workday. All right, once again, most traders would say, Steve, this is a range market. The institutions are buying at the low of the range and they're selling at the top of the range, so I don't really want to do anything here. Well, once again, this is what we do. We're taught to rely on outside sources to tell us what's going on. What is the market telling us? We apply the 50, the market's telling us the overall trend is down. We only want to have a seller's perspective. And if we apply the short-term tool, top, bottom 25%, we see here that we have 3 consecutive bars that close in the bottom 25%, followed by 3 more. And then as we can see, the market fell 80 points. So what happened to the support, okay? What happened to the major support that the institutions were buying? Remember, listen to the market and you'll have a higher level of consistency. Now, if you like to intraday trade, you can do the same thing. Here's a 10-minute chart of the spiders. As we can see, we're below the 50 and we have a confluence of bars that close in the bottom 25%, and the market fell 7 points, okay? Now, as it started to firm up, we see price starts to rise. There are no more red bars anymore, or I should say red arrows. And now we have consecutive green arrows. 1, 2, 3, 4, 5 all together. This is the market telling us that the overall trend and the short-term trend are in sync because price is above the 50 and you have a confluence of bars that close in the top 25%. So let's see what happened in the next day. Went up 10 points. So potentially you could have captured 7 points to the downside, potentially 10 points to the upside. Now you can apply this to Bitcoin as well if you'd like to trade cryptos. Obviously we're below the 50-period moving average. We have a confluence of bars all next to each other that closed below, or I should say in the bottom 25%, and look at how the market fell out of bed. In fact, it fell 11,000 points. So you think this could have helped you while the cryptos were headed lower. Okay, let's recap. Let's look at those first two charts we talked about. The first thing you want to do is apply edge number 1, which is the 50-period simple moving average. I don't care if you trade a 5-minute bar. I don't care if you trade monthly bars. You should always have a 50-period moving average on your chart. So as we look at PLRX, once again, most traders would say it's kind of a directionless market, trendless market. You apply the 50-period moving average, and edge number 1 is telling you the overall trend is up. So even though it may be going sideways, you want to only look at this from a buyer's perspective. Now we apply edge number 2, which is the top bottom 25% rule. Now since we are above the 50, we only want to identify bars that close in the top 25%. And using our platform, which automatically does that for you, we see here that we have 3 in a row right here. We have 2 right here next to each other. So this is the market telling us, screaming that it wants to go higher. And look what happened after that. Now let's look at our second charter, okay? Once again, most traders would say, hey, this is just once again a sideways market. We're in a range. There's no reason to get involved with this at all. First thing we do is apply edge number 1, the 50-period moving average. It's going to tell us the overall trend. The overall trend is down because price is below. We're not even going to think about buying this. We apply edge number 2. We're looking for bars that close in the bottom 25%. And on our platform, it's as simple as clicking on the top bottom 25% tab. And you have 3 together right here, 2 together, 2 more together. It's screaming it wants to go lower. It fell 130 points. All without the help of looking at any fundamental news, going to any chat rooms, any trading rooms, all without the help of looking at earnings because the market told you what it wanted to do in advance. So ask yourself, do you think these 2 edges can help your trading for the remainder of the year? Well, I think your answer is yes. So we have a great special offer for all of you taking time out to watch this video today. We're going to offer you our Secrets of a Stock Exchange Specialist video seminar. Now, this was 3 hours of training that I recorded. I was asked to be the head speaker at a conference in Denver, Colorado a few years back and recorded the 3 hours. And in that 3-hour conference, I spoke about many more high probability trading edges, totally different from what I shared with you in this video. I talk about which indicators not to use, as well as the difference between a system versus a strategy, the number 1 chart pattern you should always be looking for, being on the right side of the market, and included in this 3-hour video are the complete rules to one of our most consistent pullback methods, strategy number 1. You can apply this to any market and any time frame. And this all comes with educational correspondence, meaning you get my personal email address. You can contact me whenever you'd like. Now, a few years ago when I was speaking, I don't know if you remember at that time, that's when all the message boards were going crazy with stocks like AMC and GameStop. They would post things and the stock would take off. And people were saying, boy, you know, we have no luck with these type of things because we don't follow the message board. So how do we know what they're touting? And it's too late for us to get in after the stock has soared. Well, we punched up AMC, all right? Now looking at this chart, once again, it appears that we're just kind of going sideways to higher. But if we applied these 2 edges, which I taught you today, we would have seen that the entire time the stock was above the 50, so the overall trend is up. We knew in advance that we should only have a buyer's perspective. Now, if we added the top 25% bars, we see that we had 3 right in a row right here. So at the conference, I said this was a high probability setup for this to go higher. And as you can see, the stock soared 52 points after that. So once again, as I always tell my students, I would just about venture to say the majority of the time, the market tells you in advance what it wants to do. The only trouble is we're never trained or taught to listen to the market. We're always taught to listen to some guy on TV or some guy in a webinar or some convoluted indicator or the overbought, oversold tools or the support and resistance or even the institutions. After all, these things are supposed to know and tell us what to do, right? Well, it's the simple things that I've found out that work. It's really us that get in the way of our own success stories. So learn how to listen to the markets. Use these two edges as well as the edges that I share with you in the Secrets of a Stock Exchange Specialist, and you really increase your odds for success. Now, this entire Sessions and Strategy Number 1 course usually runs close to $1,000, but for all of you taking time out to watch this video, we have a special limited offer. We're going to discount the price to only $37. $37. I don't think most of you can go out for lunch for less than $50 these days, but $37, you're going to get over 4 decades of tips, techniques, and strategies I've accumulated in my 45 years of trading. But remember, this is a discount for a very limited time only. You owe it to yourself to take your trading to the next level. Why struggle with the things that really have shown you no levels of consistency? Come on board. Here's how to do it. Contact my sister site, Pro Trader Strategies. They're in charge of all the pricing and the discounts. They can take your order over the phone if you simply call 310-598-6677. You can also cut and paste that link you see at the very bottom, and it will take you to the info and sign up page as well. So, as we conclude here, I just want to say thank you so much for taking time out of your day to watch this educational video. I hope you learned something, not only about how we like to teach and how we really want to elevate your trading, but mostly about how simple it is to become a consistent trader using these two simple edges. As we take one last look at our disclaimer, I just want to say thank you once again, and I wish you all the best of luck in trading and look forward to all of you becoming students of mine in the Secrets course. Thank you so much. I'll see you next time. Bye-bye.